This video chart presentation of Origin Oil Inc. It's an OTCQB company trading our ticker OOIL. This is a 1-year chart. See Origin Oil's been in a downtrend. Some nice pops here and there, but generally speaking, making lower lows until late in December, early in January. Stock dipped as low as about 16 cents. Big bounce up to around 28 cents. It's been holding a support at 20 cents so far this year. And as that support point has continued to firm, I want to pay attention to this chart going forward to see if it's going to try and rise and establish this point as a true bottom and the breaking point for the downtrend. Now the MACD in the short term is definitely in a little bit of a downtrend, but ultimately holding right near zero. On the grander scheme, you see making higher lows back towards that 0 point. What I'd be looking for is that support to hold and for this MACD to bounce off this trend line and break back up through zero to try and develop some sort of stronger uptrend to support the idea that the stock's going to move off the bottom. Similar look to the PPO. ADX is right down near 10. It's actually registering a 9.5 right now. That's at the type of exaggerated level that's real low, and we just look for the ADX start to curl upward, pick a direction, and add some strength to it. Pretty neutral look going on with the MFIs right now. All three components in the vicinity of 50. Tells me the stock price is right around its average price. Nothing special coming from the accumulation distribution either. I actually see over the last couple months, been sliding downward. I'd look for a base to be established. I'd look for some buying pressure to come in. A little bit of a different look from the Chaikin money flow, which is climbing back towards zero. That says over 20 period increments, buying and selling pressure is essentially equal. CCI down below zero, says the price is trading below its 20-day mean. Still a long ways from its technical buy point of the break of 100. Full still, also down in bear chart territory. Says there's not any bullish momentum in this play to speak of. And the tricks, gauge a trend, down below zero. Want to see it in positive territory to show a bullish trend. A lot of those things should be expected because you can see the stock has slid off from those highs near 28 cents. But by holding that support, the bulls and bears are kind of fighting over momentum. And that can be seen by the RSIs holding right near 50. That's kind of that benchmark point of control of momentum. Above, bullish momentum, below, bearish momentum. You can see all three components, 7, 14, and 21, right there in the area of 50. So as I mentioned, to me the most important thing is the support at 20 cents. Now the stock did dip below, but that's in intraday trading. It always pulled back up into the close. If I see an increase in volume, that stock starting to come through that support level, I'd again want to see it bounce off of that 19-cent mark and pull back up into the close. Because a closing price below that level, odds are pretty strong it might come back down here and test these old lows, which closing at 21 cents from a percentage standpoint is a pretty substantial fall. So that's a key spot for this chart from a support perspective. Now to the upside, do see a little bit of resistance right around 22.5 cents. Not only because back in the fall of 2013, but right there at the end of the year and even throughout February, stock had a difficult time closing above that level with just that brief little move right here through the middle of the month before promptly falling back down to the support. So that's going to be the first near-term spot of resistance. I'd expect it to be significantly stronger, up around 27.5, 28 cents. So you can see this red line, the 200-day moving average, is in that area. It's dynamic. It's going to continue to converge on that point, and that's a pretty strong area of static resistance as well. Now on the positive side of things, that is a nice gain from the closing price on Tuesday, but to make this move and start to develop the uptrend, that's a key spot that's going to have to be broken. And that's where I'll be looking if I see any upward pressure coming into this. And to see if it's going to be sustained, I want to see an increase in volume above and beyond this 216,000 shares that was traded on Tuesday to really help the momentum and trend indicators kick it in gear to try and take that spot out. Now, it's not like it's an easy road after that. There's more resistance coming in at 32. Certainly a primary point up at 36. But that's all down the road. Have to baby step your way through any chart. And that means seeing if the support's going to stay intact. Because as I mentioned, if that falls, good chance this downtrend continues. And if it does start to push upward, see how it reacts to 28 cents. Interesting chart at this point, and one we'll keep an eye on going forward. But as always, merely my interpretation of the OOIL chart. Thank you for watching. Trade smart.